Joining me now to discuss the US economy after the FOMC meeting minutes and today's initial jobless claims figures is Joel Naroff, president and founder of Naroff Economic Advisors and also a nationally recognised economic forecasting expert. Joel, great to have you on the show. Now, first off, Joel, we've not long ago had the release of the latest US initial jobless claims figures, coming in at 350,000 for the week ending July the 7th. Fewer than forecast and even the fewest since March 2008. What do you make of this, and what about the general market reaction? And more so, is this in line with your forecasting trend for the US job sector?
Well, this was a lot better number than I think any of us expected. I was looking for a decline in the claims numbers, but not nearly as large as they were. But we need to look at this with a little bit of caution. It was the July 4th week. July 4th fell in the middle of the week. It's tough to seasonally adjust those numbers. But I think what it is that even though we're likely to see them jump next week, we may be finally stabilizing on the claims numbers, and indeed they may be coming back down. If that's the case, we're getting an indication that the labor market may be a little bit better than the recent job numbers have pointed to.
Over the past few weeks, there's been a lot of hype being built up around the prospect of more bond purchasing as a means of stoking the US economy. Now, there was not really any new news revealed in the meeting minutes, and I think market players have digested the minutes with mixed interpretation. Right now, it's coming across to the market that Fed officials are split on whether to act, how to act, and when to act. Do you think this is the case?
I do. I think that there's a real worry in the Fed that if they keep doing things such as coming up with another quantitative easing or other programs that really don't move the real economy forward. They only have an impact on the financial economy. I mean, the quantitative easing programs did wonders for the stock and bond markets, but it didn't do a whole lot for the economy as a whole. So I think what they're looking at is a concern that they don't want to seem to be impotent, that whatever they try doesn't get the economy going. And it's a recognition that there's not a whole lot of bullets left in the Fed's arsenal. And so I think you have a situation where there are some members that want to do anything to try and get the economy going because of the high unemployment rate. You have some members on the other side that say, you know, we're not going to succeed, but we're going to lay the foundations for inflation. And then there are others that simply say, hey, the economy's not that bad right now that we have to try to do anything, given we're already doing an awful lot. So, yes, I believe the Fed's split, and I think it's a logical split at this point because monetary policy really doesn't hit the economy that heavily at this particular point.
I think that's a very good point there, because at the same time it's important to actually consider the impact of another round of full balance sheet expanding QE at this point, and perhaps how much it will actually help.
That's exactly right, and I think I'm one of a lot of people who simply feel that expanding the balance sheet is more just a saying we're trying than really accomplishing a whole lot. I think the Fed's decision to extend out maturities, to keep mortgage rates really, really low, and that's being helped by the rest of the world investing in U.S. securities, has an impact. We're beginning to see the U.S. housing market pick up. That low mortgage rates are feeding into that improvement, and nothing would help the economy more than an improving U.S. housing market where prices rise and housing starts pick up. So I think that one policy is probably the best policy right now. Expanding the balance sheet, another round of quantitative easing that the markets want to see, I don't think necessarily does a whole lot.
What about Operation Twist? Do you think Operation Twist has had the desired effect so far?
Well, I think it's had some effect. As I indicated, it doesn't do it on its own. I think some people are refinancing. We need rates down even further to get the next real big round of refinancing because prices haven't gone up. People have done an awful lot of that in the last year or two, so it's difficult. But to the extent that mortgage rates are so low, it's beginning to have a positive impact on the housing market. It's allowing an awful lot of people to have an increase in their cash flow, and that's improving, household budget positions and balance sheets. So it's having an impact. Is it a large impact? The answer is no, but it's better than nothing at this point.
Well, looking at jobs, the housing market and consumer confidence and spending, right now, where do you see the US economy this year in terms of economic growth? And what do you see as being the potential drivers?
The key is going to be confidence, both business and household confidence. And all the factors that are driving confidence are on the wrong side. We have the problems in Europe, and it's not clear how well they're being resolved. That's not helping business confidence. We have the fiscal cliff, and we have the presidential election, and we don't know what the world will look like after November 6th or after January 1st at this point. So obviously, businesses are being extremely cautious, and that's why hiring has slowed at this particular point. Slower hiring raises questions in the minds of consumers. Are we going back into recession? And causes them to be more cautious. So we're dealing with as much emotion and psychology as we are fundamental economics. The economy is growing. It's growing at a 2% pace right now. I think we'll see somewhat of a pickup in it as consumers spend from the lower gasoline prices and hopefully other import prices. And that increases spending a little bit and allows for hiring to pick up a little bit. But I don't see this economy accelerating sharply. I think the second half will be better than the first half, but we're not looking at strong growth.
Joel, thank you very much for speaking to me and sharing your outlook on the US economy. Now, some of the things coming up on Dukascopy TV tomorrow, we'll be discussing the week ahead for financial markets, another edition of Targets in Focus, and of course a closer look at some of the day's headlines with the press review. That's all to come, but for the moment, goodbye.